what I wanted to educate you through this video was that understanding that there's a certain cyclicality to this whole business. And I came up with three patterns, three patterns in the kind of cycles that a banking corporation usually experiences. The first pattern that I would like to mention is rising NPAs and thereby increasing the credit costs for the company. As I've mentioned a couple of times already, I've kept educating through the various videos since I've been analyzing banking related companies, was that one of the biggest credit risks for any bank is the increasing number of NPAs. If the NPA percentage is increasing every month, every quarter, or every year, one of the biggest liabilities for the company, for the banking related company, is that they cannot absorb that loss. If they cannot absorb that kind of loss, they would not be profitable for anybody, and thereby they would not be able to inspire a certain sense of incentive for the shareholder as well as the board as well as the management to continue to invest in the banking corporation. So one of the biggest cycles that a bank would experience is the rising percentages of the NPAs, in specific the net NPAs and the gross NPAs. So what is the biggest amount of what is the cover against NPAs for any bank is usually the provisions that they really set aside for bad loans, for countering the credit risk that they're incurring from these NPAs, is that having increasing the amount of provisions for each of these NPAs that are soon about to be NPAs, each of these loans that are soon about to be classified as an NPA. So that is one of the biggest cycles that I've experienced and noticed in every banking related corporation, at least for like the last 5 to 6 years, that any bank would usually experience, right? Another cycle that I want to mention is that repo rate cuts.